Hey traders, today we'll be going over 15 tips to help you draw perfect support and resistance levels on your charts. Some of the techniques we'll be going through today are not well known by most traders, so make sure you stay till the end to catch all of them. Let's get right into it. Tip number 1 is to find all the areas where price had a significant reaction away from and mark those areas on your chart. Now, just a reminder before we do this, the more easily you can spot these areas, the better they will be. If you're spending too long looking for an area, then that probably means the reaction away from it was not significant enough. So you would just move on and pick a different area that jumps out at you instead. So here price is moving up, hits this level, and then reverses to the downside, giving us a significant reaction. And again, price is moving up, hits this level twice, and then gives us a significant reaction to the downside. And again, price is moving down here, hits this level, and then gives us a reaction to the upside. And here, price moves down, and we get a big reaction off this level. Once you've marked all the areas where price had a significant reaction away from, the next step is to draw your support and resistance levels in these areas, ensuring they get the most number of touches possible. So for our resistance level, we have 1 touch here and 2 touches here. And for our support level, we have 1, 2, 3, 4, 5, 6 touches. Tip number 2 is to pay attention to how price moved through your level. Now, this is something that not many traders know, but you don't always need a reaction away from a support and resistance level to validate it. Here we have a level on our chart. If price approaches it, and in order to break through the level, it requires a large amount of momentum in the form of wide range candles, then that probably means our level was significant. Whereas if price approaches our level and it's able to break through on a number of smaller candles without requiring any momentum, then that probably means our level was not significant. So make sure to pay attention to how price moves through the level of support or resistance to help determine how strong the level is. Tip 3 is to remind yourself that support and resistance levels are not actually a level, but more of a zone. It's very rare that price will come to a level and reverse the second it touches it. Quite often, price will stop short of a level and then reverse without actually touching it. Other times, price will move through the level by a small amount before reversing. If you find it easier, then draw a rectangle around your levels to remind yourself that price will quite often stop short of a level or move slightly through a level. We draw support and resistance as lines on our chart to keep things simple and to keep the charts looking clean, but we must keep in mind that these lines are actually zones when trading. Tip number 4 is to take note of weekly highs and lows on your chart, as they can often provide a significant level of support or resistance. Here we have a 5-minute chart of the dollar Canadian. Here is the weekly low from the previous week. As we approach the level, we are left with this long wick bearish candle, and then we see a reaction to the upside. Price comes down and tests the level again here, and eventually we pull back into the previous level of resistance here. Tip number 5 is to look for long wick candles. This signifies that we've had a strong reaction away from a level. The longer the wick is, the better the reaction. You can see here we have multiple long wick candles, 5 in total, showing that there was a strong reaction at that level. Tip number 6 is to clean up the levels you already have on your chart by picking only the highest quality ones. This will ensure you don't get distracted by low quality trade opportunities and will allow you to focus on only the highest probability levels. Here we have a chart with multiple levels of support and resistance drawn on. By cleaning up these levels and picking only the best ones, this will allow us to be alert and ready for the best trade opportunities available that day. Tip number 7 is to combine your levels of support and resistance with round numbers on your chart. This will give you a confluence of factors working in your favor and increase the probability of seeing a strong reaction at your level. Here we have a 1-hour chart of the dollar yen. We have a level of resistance overhead formed from the price action the previous day. What makes this such a great level is that it's also the 107 round number for the dollar yen. As you can see, we had 1, 2, 3, 4, 5 attempts to break through this level before finally reversing to the downside. If you're enjoying today's video so far, then please show your support by hitting the subscribe button below this video. Tip number 8 is to find a pair that is strongly correlated with the one you're trading and see if there's a level of support or resistance in the same area on the chart. For example, say we're trading the Aussie dollar. Here we have a level that was broken through with momentum on these large range bullish candles. Price then returns to the level here and we see a strong reaction to the upside. So what we can do now is switch over to a pair that's strongly correlated with the Aussie dollar, which in this case would be the Kiwi dollar. Looking at the Kiwi dollar in this same time frame, we can see that we have a strong level of resistance here that had multiple touches. When we finally broke through that level, price returned to it here and we saw a reaction to the upside. This would give us more confidence in our level we're looking at on the Aussie dollar, knowing that a highly correlated pair also has a strong level of support or resistance in the same area of the chart. Tip number 9 is to favor recent levels of support and resistance more so than older levels. Here we have a 4-hour chart of the pound dollar. We have a level where price hit, and then we saw a strong reaction to the downside. As we approach this level 2 weeks later, we're going to favor it more heavily since this level was formed recently. Contrast this to a level that was formed months or even years earlier. We would have less confidence in trading with those levels since they were formed much less recently. Tip number 10 is to favor levels that were respected by both buyers and sellers. Here we have a level that was respected multiple times by buyers, but also multiple times by sellers. This makes the level stronger than if it was respected by only buyers or respected by only sellers. Tip number 11 is to combine your levels of support and resistance with a moving average for added confluence. Here we have a 5-minute chart of the pound dollar with a 200 period simple moving average added. We see a breakout to the upside. Prior to the breakout, we have a level of resistance with multiple touches that we can expect to become support when price returns to that level. When price does return, we also have the confluence of the 200 period moving average, adding to the probability of this trade. Tip number 12 is to take note of the monthly open for the product you are trading. Longer-term traders will often use the monthly open as an area of value to help determine their trade locations. Here we have a 4-hour chart of the euro-yen. Here is the trading from August, and here is the trading from September. This is the first candle of the month, making this level here the monthly open. We briefly push above the monthly open and then have a sustained push to the downside for the rest of the week. When we return to the monthly open, longer-term traders looking to place a sell trade will see this as a level of value and initiate their trades here, making this an excellent level of resistance. Tip 13 is to use a line chart to help find turning points in the market and then use those turning points to find levels of support and resistance. Here we have a regular candlestick chart of the euro dollar. By switching over to the line chart, we can quickly identify areas where price reversed from, and we can use those areas to identify levels of support and resistance on our chart. Tip number 14 is to pay close attention to where significant news events happened and mark them on your chart. For example, if you're trading the Forex markets, a significant event that happens every month is NFP, which stands for non-farm payrolls. Here we have a 5-minute chart of the pound dollar. This candle right here marks the time period when the NFP numbers were released. Let's draw a rectangle around this candle, including the candle high and candle low. We can see the following week when the markets opened up again, this area provided a significant level of resistance as price tried multiple times to break above it, but eventually reversed to the downside. Tip number 15 for drawing support and resistance is to use a time frame that makes sense for your style of trading. If your favorite way of trading is scalping on the 1 or 5-minute charts, then it doesn't make sense to use a monthly level of support or resistance for your trades, since these levels can often be hundreds of pips wide. Similarly, if you're trading on the daily or weekly charts, then using a level you took from a 1-minute chart will be insignificant when looked at from these higher time frames. So when choosing which time frame to draw your key levels on, make sure it suits your overall trading style.